India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Tuesday morning. We are coming to you live from the CNBC TV18 Motilal Oswal studios. Markets getting a little more nervous, a little more edgy. Market made a new high yesterday, but ended in the red. That's the story, the way we pick up things. And of course, I mean, it's largely a Q-less market, not clueless, but Q-less because US markets were shut. I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, hi, morning.
Hi, Prashant. Good morning. Nigel, morning. I mean, I like what I see, right? Life highs for 3 straight days. Of course, the Nifty cooled off a little bit from fresh highs, but so much buying coming in from domestic institutions. So the setup is good. Let's see where we go from here.
Well, in the last 90 minutes yesterday was a perfect example of how we could see volatility pan out for the next few sessions as well. We fell down. We were down close to around 50 points. We recovered as well. So big volatility, particularly in the last 90 minutes or so.
Absolutely. And I think, initially, right, in the first 2 phases of elections, markets got very nervous that turnout is low. There was that sell-off.
Yeah.
Then, all these interviews and sound bites started coming in that, 350 par, 400 par
And
is
the
still
RBI
alive.
dividend.
And the market rallied. And I think as we get into the week, actually of finding out what the result is, there is, of course, naturally, I think, a little bit of sort of nervousness, a little bit of edginess. It's normal in that sense till we find out, right? Because no one knows till you open that ballot box, so to speak. Let's just quickly take a look at what you need to know as we begin another session. So Nifty made a new high. And that is yesterday, the Nifty that is. And then, of course, it was a sharp sell-off. The high was made just before 12 noon. The selling accelerated at about 240, 245. And, of course, I mean, the market never really recovered after that. Not very large. It's just that from the day's high, of course, it was a bit of a disappointing close. 22,932 is where we finally left off. Actually, pretty close to support. So 20 hourly, etc. I'll get to that in a bit. Now, FIIs and what they've done is interesting. So in index futures, so we've been talking about this, from 2 lakh net shorts to net short contracts or 98,000 net short to 18,000 net short. And now, as of yesterday, that number is long. So FIIs are from being sort of at an extreme, three sessions back, from 2 lakh net short, they're now 22,000 contracts long as far as index futures are concerned. Now, that is quite a swing, quite a turn that we're talking about. And, we mentioned this on Thursday morning as well, that when from lows, you start a swing, it sometimes ends up on the other end. Not just small net long, but sometimes it can go to a bit of an extreme on the other side as well. We're not there yet, but this is, of course, now a net long market in that sense, from an index future perspective. On cash, the selling intensity has been reducing, but there's still sellers. 540 odd crores was sold in the cash market yesterday, but the selling intensity has come down. I think that's a point to be noted. As I said, little by way of fresh cues, US markets were shut overnight. Look at US futures, S&P, the E-mini contract, etc. I mean, not very much happening in Asia, the last I checked. Oil prices are slightly higher, but not by a whole lot. Overnight, you had some comments coming in from G7 leaders, and this kind of talks to the trade tensions between the Western countries and China. And G7 leaders expressed concerns about China's use of non-market trade policies and said that they will take measures to ensure a level playing field. This follows directly from Biden, U.S. President Biden's sort of, tariffs which were put on EV exports out of China, green exports out of China. EV, of course, is one of those things. So, as we go into sort of later this year, and the big one is U.S. elections, I think in that sense, the trade war, which we saw, around the time that Trump came to power for the first time, I think that the noise, the action, etc., will only increase. So, need to watch out for that. Now, 2 speeches from Fed officials later tonight, and senior members will be speaking, and I think markets will watch for clues about what they think of when the appropriate time is to start easing, etc., or if they don't think that now is the time. Just to circle all of this back to levels, so as I said, we are pretty close to support levels. The 20-hourly, as of yesterday's close, we kind of left off at 22,932. The support is 22,915. So intraday, of course, yesterday towards the end, we swung below that level. We got to about 22,800 something, but then there was a bit of a rebound. The bigger sort of support is 22,771, which is the 40-hourly exponential moving average. And this can be used as a bit of a trailing reversal stop as well. break above the high, which is 23,110, of course, will indicate further up move. And Nifty Bank, it continues its outperformance. Yesterday, it sold off also from the day's high, but ended 0.6% higher still. So did far better than the Nifty. And of course, here we're waiting for that 50K number. The all-time high is just under it, 49,974. On the way down, supports again come in at the 20 hourly, which is 48,963, and then at 48,638. So these are kind of very, very near-term support levels. But I think we're in a bit of a holding pattern till we know. And we will know for the first time on Saturday. And if those kind of exit polls are really very varied, some showing one extreme and the other showing some extreme, I think Monday is going to be a little confusing. And then, of course, Tuesday is the actual election result. So expect volatility, expect a bit of indecision as we go into all of that. Sonia.
Oh, absolutely. And volatility can't be ruled out, right? At least until the election results. So until counting day, if you are a trader, then it is prudent to be a bit cautious, a bit careful of all the volatility that you're seeing on your screen. But for an investor, for a long-term investor, this is really a good-looking market. I mean, we've been hitting life highs for 3 straight days now, and the buying from domestic institutions is something that continues. That's been coming in thick and fast. In the month of May so far, we have seen buying of almost 42,000 crores, and yesterday as well, over 900 crores of buying has come in. So that money has been relentless. The Nifty is holding at this 22,900 mark, despite all the volatility we saw yesterday. And if you just take a bird's eye view of what's been happening in the market, from the lows that we hit on the 9th of May, the Nifty has gained almost 1,000 points. So it's been a relentless rally ever since, a lot of positive comments came in from the government as well as the RBI dividend, etc. The market has just been moving in one way, and that's upwards. Now, the Nifty Bank is the one that I've been talking about last couple of days. There are some brokerage views that are positive on the Nifty Bank as well. So keep an eye out on that. The 50,000 milestone is not too far away. So that's the next level to watch on the Bank Nifty. Now, as Prashant was also mentioning, FIIs have now almost covered all shorts and are now net long in this market. So if you look at what's happening in terms of index futures, right, FIIs net bought 5,400 crores in index futures yesterday. In terms of individual stocks, a lot of the PSUs have been coming out with numbers. So just a quick word on that. It has been a mixed bag in terms of PSU earnings. NMDC was on the weaker side, but you had NALCO and LIC that were decent set of numbers. We'll talk about that in greater detail. But for now, the GIFT Nifty is suggesting a strong start, a 40-point higher move. So it looks like that positive trend that we've seen the last couple of days could continue, but with some volatility.
Well, that's right. And the FI as well, they are net long for the first time since the 2nd of May. Remember, they were aggressively net short, and now they've covered all of that. So the first time since the 2nd of May that the FIs are net long on the index. Today, we'll also keep an eye out on the financial Nifty because that plays out weekly expiry. So some bit of volatility on that front as well. What did the FIs do yesterday? Well, they covered more than 30,000 short contracts. They added some mild long positions, and that's what takes the long positioning now to around 52%. Just a few sessions ago, it was less than 30%. That's moved to around 52%. In fact, let's just pull up a chart of what's transpired in the last 1 week or the last 5 sessions or so. The long additions is nearly around 1.5 lakh contracts, and the shorts have got covered up more than 1 lakh contracts. So the swing factor out there is nearly around, more than 2.5 lakh contracts. And the chart actually will tell you, and if you pull up a graph up for you on the screen, it'll tell you, they were mildly net long earlier in this month. Then they went aggressively net short with close to around 2.5 lakh contracts on the short side. And now we are back to the net long positions of around 22,000 net long contracts. The short point is bulk of that short covering has taken place, which explains why from 22,000 we have moved to around 23,000 odd. What about the options data? Well, the call writers believe they want to defend these higher levels, and that's where you're seeing the 23,200 call, 23,100 call. Well, it saw a fair bit of addition in yesterday's trading session. Big build up, close to around 30 lakh shares getting added between both of them, which brings us to the levels. Since these levels are getting aggressively written, or these strikes are getting written aggressively, that's why there is some resistance added on this 23,150 to around 23,200 odd mark. The support, that's the previous resistance. It comes in at around 22,700. Well, if that breaks, then the 20-day MA is what you're looking at. The Nifty Financial Services Index, well, that will play out the weekly expiry as well. And there was a fair bit of options data that was active yesterday as well, though it came off the high point of the day. So that's the index to watch for the last 60 minutes. Stocks that I'm looking out for, I'm looking at the PSU miners for today's session. NALCO, well, the stock will open up well in the green. It's come out of the F&O ban. So that one will react positively to a set of numbers. NMDC, the numbers are quite disappointing. So I'll be interested to see what happens. The stock should open up lower, and then it'll be interesting to see what happens out there. And GMDC, on a sequential basis, there's a bit of a recovery. The stock has corrected a fair bit from the top. So the PSU miners is something that I'll be keeping a track on.
Okay, so plenty of stocks to talk about this morning, but let's also tell you what's happening in the money markets, right? Some views coming in. Abhishek Goenka of India FX and Asset Management says the US one-year inflation expectation is coming in lower than expected, and that has caused the dollar to weaken a bit. He says the key data this week would be the April PCE print due for release on Friday. He says the rupee has come off the lows and is the strongest in about 2 months. He adds revival in FPI sentiment posts a much bigger than expected surplus transfer by the RBI to the government, and that has aided the rupee. He expects the rupee to trade in a range of 82.60 to 83.60 over the medium term with a slight appreciation bias.
Okay, well, on bonds, we have Vishal Goenka of IndiaBonds.com, who says bond markets rallied last week on RBI cash transfer to the government. He expects markets to remain range-bound ahead of election results next week. He says RBI is likely to remain on hold next week at their policy meeting. It goes on to add the global cues for interest rates still remain mixed in a way direction. He expects a 10-year benchmark bond yield to be between 7.01 to 7.06%.
Well, a lot of stock-specific action to track for you. Get to that in just a bit in our special Top 10 segment. We're looking at LIC, United Spirits, Nalco, GMDC, TVS Supply Chain. All of them will be reacting to positive news flow. On the flip side, 5 apiece. So we have 5 stocks reacting to negative news flow. That's NMDC, Natco, Borosil Renewables, Timken India, and Concord Biotech.